What's going on, guys? Time for a little catch up, a little recap, a little what's been happening in the market as we start the new year here. So let's go over a little bit here on the X. Not too many big updates here on the X. Been focusing on tons of other stuff, but December 30th, days back, we said we are posting and still on track for the QQQ to slam into the 50 SMA daily. Finally, a couple days later, we got that. We posted this little picture here today. There is a massive over-under with the algos today with a bunch of paired algorithmic gaps, which are was signaling definite downside. We didn't know how strong, but definite downside from under right here, 59.60. And of course, obviously rejecting that 50 SMA. So we had a couple major moving averages you see right here. This is the 10 SMA daily, 50 SMA daily. And if we did stay under those, well, obviously we're going to start heading down, right? So let's start on the daily chart here. We had picked this doji body as well as far as before Christmas. I'm sorry, before New Year's, not Christmas. We'll get all the dates messed up. To be a fantastic over-under for trend. Now, as you back up, we've talked about this a million times. Everybody should have already as well. RSI lower low in sequence, turned over on the MACD, the sell wave of the MACD heavier. So in retrospect here, pullback into Q1 here, that's perfectly fine. That is exactly what we wanted to see. Now, QQQ into the 50 SMA, we can start there. That was the call from the last couple of days. Now, despite SPY being the better lead market on what's actually going to happen here in the market, Qs is still a great favorite for catch-up here because remember the divergence. Qs was at all-time high, pushing. SPY was not. So that means Qs has actually a lot more road to the downside than not. So again, same instance as SPY is going to be here where you see lower lows in the RSI breaking through the 50, lower high coming up, MACD creating larger waves, so on and so forth. So pullbacks into the first quarter here are very clean so far. So 50 SMA over under. So let's talk a little bit about our day trades and what we did today for the entirety of the day. Go down to the 15-minute here first. So a couple of the bigger moving averages, the 200 SMA being one of them. This is going to be on 15-minute study here. So what I'm going to do is I'm going to hide these so you can see them real quick. There we go, finally. So the 200 SMA is in the pink dash line here. We're on the 15-minute chart, okay? And oddly enough, this was one of the bigger precursors we were watching here this morning. Now, we mentioned it very briefly. We'll go to a 5-minute chart on the algos instead, but something I do want to note here at the 15-minute chart, when the 200 caught up here and hit the 10 SMA daily, the last time we got even close to both of those was way back here on 12/26, okay, December 26. And now, notably, we started to pull back, and then pre-market to live hours, notice that 200 SMA did not get tagged any of these days, and today it finally did. So that 15-minute chart was signaling resistance if it stayed under that 200 SMA for trend because it did reverse back here. So breaking the 200 SMA, coming into full resistance and playing down, and of course catching that 50 SMA daily last trade day before the new year here as we wanted to see. Now, we had a couple different instances where we had seen continuation shorts here because of the gaps and because of the 1 minutes that were left open. So this morning, this algorithm was left here in the pre-market. Both SPY and QQQ had this pre-market algo high-low. Both of them ran right into yesterday's close with the wick. So if you were to back out here QQQ, you could look at SPY. I'm sorry, that's right. The MacBook never, it doesn't do anything with minimizing windows. So we'll just type it in manually here. So here's the algo on SPY. Same exact thing, okay? And what we did here is we like to high-low on trend from Golden Pocket. Nothing new here on this channel or how to read some of these algo blips that only exist for us on Think or Swim, okay? No other platform. Now, when we come up to this, we can do it up or down. Direction is based off of the Golden Pocket. Now, with that 15-minute 200 SMA coming into some nice resistance pop, and the dojis on SPY and QQQ, which we had just talked about, we picked right here. It's the same day, 12:30, right? And anything underneath that doji body was going to be considered very good resistance and continue downtrend, right? Algorithms have a very specific speaking quality with dojis. Now, right here, obviously rejection, but we haven't tagged the 50 SMA in a long time, so the bounce off last trade day before the new year into the pre-market, into giving us a little bit more of a high to short into to continue, was perfectly fine. So we take that algorithm now in pre-market, we slide it to the downside, we extend it to the right, And we see the 1618 retrace was the pretty much the bottom consolidation of the day, right? So what we do is we take these Fibonacci points, high-low, right, the fib box like always, and we use the golden pocket of that algorithm, which is going to be, of course, between the 3820, 61.8, just like so. So this is what picks trend direction. This is what we drew this morning for the crew. Now, the tricky part about this morning was the absolute disrespect of the market, right? So when it came in, notice that this thing just blew right through 5-minute stuff. Just 5-minute chart had no chance to breathe at all. It opened up. We ran right through the 200 SMA in the 5-minute, ignored the 10 and the 100 and the 666. And then the odd part about this is the golden pocket that we had see here, there was 0 attempts at resistance either, even on the minute chart, right? We had that knee-jerk reaction. Now, of course, we can couple that to Tesla delivery numbers, one of our Mag 7s there. And it did fall short of delivery numbers, so we did get a little bit of that panic and continuation at the live open. Okay, well, we bounced that yesterday's lows in the 50, V reversaled all the way back up, only to fail later on in the day for the golden pocket. So when you zoom in time frames, go to that 1-minute chart here. From the 5, you note that just nothing was respected here. The 666 kind of opened up, and that was it. It broke over the 10. It never back tested the 10 until right here. Tiny little scalp, and then washed right through the 100, right through the VWAP, same as it did here. There's no tags, right? So when it comes up and hits a backwards price action tag where price action comes up, hits 100 EMA, and then usually puts in a little red candle before it wants to continue here. We didn't see any of that at all until later on in the day. So this is that early morning, impulse down, impulse up that didn't respect anything, not VWAP, not magnets, not tags, anything. And sometimes the algos do that. Nothing can be 100% predictable in the market. Wouldn't be any fun, right? So what we did was we took this center on the Fibonacci golden pocket, and we looked for trend reduction. Now, biggest pieces to this was the doji body right here, in between, about 1560 or so there, 1550.60. And then the breakdown here was, clean for a retest. So what that means is you take this channel, we can move it in a little bit here, like so, and then we wait for confirmation. So it couldn't stay above the channel, so it was mainly an over-under, so where you're going to get price action above or below this channel. It broke out of the channel, hit yesterday's lows in the 50, caused an impulse snap up on the V reversal, obviously trapping some of those shorts that would assume we would just get a free panic breakdown through the 50. We already hit it last trade day, so the best case scenario would be to bounce it for a little bit, come back down, snap, right? So it traps the shorts in the first algo wash down, saying, hey, shorts, go ahead and short into that 50. We're going to break it and just panic all day. And then the market laughed that off, then trapped the longs to the long side and put in this panic V reversal above the doji as if you could have used that doji level as support again. And then just ran up. So it's not an easy day to the slightest, not one bit. So it came down to, again, the zone of golden pocket. After the market's opening volatility, usually after 10:30, 11 a.m. Central, if we get an absurd amount of volatility like we see right here, where it just cuts through moving averages, Fibonacci zones, and it doesn't respect anything, it'll calm down after the EU close, 10:30 a.m. Central, so on and so forth for 11. Now, when we take that into consideration, all we got to do is see right here, 10:30, 11 o'clock, ish. So that's general area here. So we start assuming that coming into the algo close, when it tagged into this 50 again, that it was going to start respecting certain things, right? AKA moving averages, golden pocket. So regardless, we had that impulse up here, snap down, came into the 50, into the pre-market lows, into the 100, came up, tested not once, but twice the zone before the bigger failure later on, right? So nothing goes in a straight line. And let's go to the 5-minute chart now, look at a little bit of oscillation indicators after the market kind of chilled out for a little bit here, because one big giveaway here for the continued downside was the MACD. And we do channel surfing, right? So we like to be on the top of the channel of the RSI or the bottom, and that really dictates a helpfulness of trend, or at least probability of trend for us here at Boylan Trading. So when something breaks down here into the bottom of the RSI and the bottom of the MACD, you can assume it's a pop to short styled momentum, okay? Because the oscillation indicators are trapped in the bottom of these channels. So when the price action came down to the 50 and yesterday's lows, it popped up, we knew to look for the late day shorts, okay? And I said, guys, I told my team, if this does hold under that golden pocket, we're going to start heading down. And we did a breakdown on SPY, because we were trading SPY more than QQQ, and I said we're going to chase down the 100 EMA and SPY for this confirmation. So let's swap over to there. So just to remember here, note, bounced yesterday's lows 50, trapped both sides in that volatility, confirmed right there, and then had to pull back. And of course, if you had your fib right here box out, anything is short. Again, RSI lower channel short, MACD short, shorting all the pops on the reversal, came back down, hit target 1618. Generally speaking, when you have a Fibonacci high-low, you pointed to the downside. In this scenario, the 1618 will be your target short. So if you went short on the oscillation indicator is telling you the lower high of the market, being stuck underneath the golden pocket, all were great confirmations of trend. Now, when we move over to the SPY, the last trade call here was, again, under the purple doji body here, and we said, if we start to break down under the pre-market low with some speed, we're going to chase down the 100 EMA or 581 just about. And I said the 100 fib because we have a daily candle, which was outside of our last weekly range. So if you were familiar with our last couple of videos, we had this guy right here, and this is 1220's candle. 1220's candle slipped outside of that weekly range and then snapped back in. And we made a prediction saying, well, if we snap back into the big Powell dump candle, which was this candle in question, 1220, we would push up to the lower high, fail because of the golden pocket that needed confirmation, okay? So with that being said, you can see exactly what happened here with the purple fib, right? It came back inside this purple fib, got trapped inside the top, right, 0. So if you draw a fib box high-low on 1220, price action failed to continue the breakout to highs at the Santa rally. We got trapped back inside the fib right here, closed right on it, 1227. And then the next doji candle opened up inside, again, the high-low of this candle, 1220. That's a very specific candle. Now, the reason why we targeted 580.83 is because this candle doesn't have any filled up Fibonacci to the downside, which means if you make a Fibonacci high-low like we did here, right, the Fibonacci high-low acts as a fill point. So between the high low, let's just draw it as a box, be easier to kind of see for you guys. So when we fill the box top to bottom, the Fibonacci high low has to be a fill point. It's kind of like a gap. So when the price action comes outside of the high low of that candle, okay, it has an attempted move. It's going to attempt support at the top of this candle and move to the 1618 if we had the fibs to the upside. If it does not do that, it falls back inside the candle range, and we're talking again 1220 here. So it's going to fail the breakout and hold, and it's going to fall back inside this box range, which is the high low of the 1220. Now notice it came down into the golden pocket, took a couple days right here of consolidation before continuation. Now let's look at the bearish metrics. We already did the oscillation in the beginning of the video. What else is the bearish metrics here? Under the 50 SMA, under the 10 SMA, and under the Powell candles 50 fib, okay? So all of those bearish notations should be in your head clean and clear. So late day on the breakdown, we told our team to say, hey, if it breaks down under their pre-market, that 618, it's going to fill up the fib range from the daily candle. Sorry, I forgot to do that on the candle here. And the fill up means, the price action has to complete the action inside the candle. So 1220 high-low, you need price action on candles that go all the way up to the high and all the way back down to the low, okay? So when it opened up here, notice 1223, we took care of the high side. 1224, we created a gap right here, remember? So if you zoom in right there, notice that was tagged and gapped. So we still left a gap right here between the two candles. So the top of this candle needs to still be tagged with this one. So I'll make it easier for you to see. Top of this candle, bottom there. So this is the top of 1220's Fibonacci range. It left a gap right here, sneaky guy. And that piece right there still needs to be filled with price action. So it failed the next day, right here, after it attempted push, filled it. Okay, now we got our fill day, 1227. 1227 on that Fibonacci is the fill day. So that is filled to the top. Now the bottom is left unfilled, which means all the price action on the bottom of this candle, that's what it looked like the first couple days. So creation, 1, 2, 3, 4. The fifth day, we got back down to the golden pocket, okay? And then it shrank. And what shrank? The pocket of price action in the 1220 candle, right? Because doji day, which we used the center body for an over or under of the body, became the new golden pocket tag. Because if you look real close, we could even hide this one for now, or just redo it a million times. The gold pocket there, we never hit the bottom of the golden pocket with that second day. So it pushed back up and bam, we found a doji right into the golden pocket. Okay. So the golden pocket was created on the purple fibs, 1220, perfectly on the 50, which means this doji body is going to be insane forward direction. And now we know that we have a large block of action on the bottom of 1220's candle, all down here. Look at the fib range between the 61.8, 580.83, that's the 100 fib, all that action, right? Until the doji. And the doji and the consolidation day met at yesterday's lows. That is where this channel came from. Okay, the bottom of this 1220, it was still left open. Now today, this is the reason why this candle, 1-2, had an opportunity to fill the price action. This is what it looks like intraday, okay? So intraday, same thing. Doji body was made, boom. You can see the purple daily golden pockets here. Came down, matched lows. See, matched lows. So when it lost yesterday's lows and when I called for pre-market low before we left here, that was the biggest instance, right? So it came down, created a fresh low, again, pushed up, gave you the lower high, and slammed into the 580.50. Now, the next target after that is the 100 EMA. Excuse me. So two things are going to happen here. I don't know which is which here. We'll see how slow the overnight comes. The futures just opened up, actually, not too long ago here, a few minutes ago. We're getting a pretty slow drain so far. But here's my prediction for the last two, okay? We have a no 100 EMA tag, and we have been waiting for one because every time we were recovered back here, and then the last two times it attempted to go down, it just caught the next fastest moving average, which means we're over the 100 EMA in the green here, came down, almost hit it. Did we hit it? No, we shied it. Price action ran away. And then it caught the 50 SMA, okay, and continued trend run, left the 100 EMA in the dust. Okay, that's fine. When it breaks down and has a catalyst to break down, we will magnet, price action will come back down to the 100 EMA it shied before, right, as a magnet. And we like to, utilize those algo magnets and swing and intraday and, all of our gap trading. So the two things that I think are going to happen here are going to be substantial to chase down some of the triple gap zones here. Now, if you didn't watch any of the videos from months ago, or I should say 6.5, it was months ago, yeah. We have a triple gap scenario, okay? We'll just draw a couple lines here. If you notice, gap 1 creation, and then we held the gap down into that 50 for a while, gap 2, and then we had gap 3. Now, 1, 2, and 3, 1 was filled to the upside, leaving 2. No big deal. Eventually, these two zones right here, for this double gap as well, will be predominantly the short target, okay? Because gaps tend to fill very heftily when there's 2 or 3, especially in a row or close to each other. That will be a huge target to come back in must drop. So obviously you see where the algos are. That matches up perfectly with the 100 EMA. Worst case scenario, our oddball scenario, will be this. If scenario number 1, which let's go over the oddball scenario, this is the gap range right here that we need to come into. Overnight futures does a flush, right? Friday flush, and creates a candle like this. It's a little big, but you know what I mean. We start under the 100 EMA, and this is the creation candle of the awkwardness right here. We gap the 100, and we triple gap again the double gap that we had seen back here at 579.27. Now, again, futures will tell us all this data overnight, so we don't have to guess. We're just going to wake up tomorrow, and it's going to tell us in pre-market on what's happening on ES. Now, if that happens, the 100 EMA will then be looped, right? It'll be a big old miss. It'll be gapped right through. So price action here comes down, shies that 100 EMA, and then opens up live under the 100 EMA. So sub 580, sub 579, something down here, maybe even lower, and then goes down. Okay, no big deal. Well, if we get a panic from that and we actually get a little bit of that correction, which, coming into 25, we need a little bit of a correction. If you look at the long-term moving averages here, we have not hit, when we shied the 100 EMA here, just drawing tool. We shied the 100 EMA back here. April ran to all-time highs, did the correction. This is the last real correction. Didn't hit the 200 EMA or SMA down here. That shied it, right? So what does that mean? Well, popped up, price action shies the 100, hits the 50. QQQ's actually shied both. And SPY comes up and finally starts the downside. Well, 2618 from our 12-2 candle also predicts us at 556.72, and that could be a nice corrective move that we need to start the next bull manner into 2025. That's about 9.3% best case scenario. Now, I think it should fly a little lower than that. And I think I'm usually an 8 to 12% guy. So if it does bounce here, that's perfectly fine. I'm 8 to 12%. That's 9.2. No big deal. If that doesn't want to come back down and fill some of the wider gaps that we have left open. The triple gap will fill 100%, I think, coming into next week here, 576. This will be filled at some point. I don't care if the scenario is the goofy one where it opens up down here, pushes into the gaps, then fail, or if it opens up cleanly tomorrow, which we'll go over in a second here, and then goes down. It's fine. But the big goofy scenario to come back down here is going to be an oddball, because all of these gaps and the gap through of the 100 EMA overnight tonight would be detrimental to chasing down these gaps and then going back along, because we have this gap still open, this gap still open, those price tags right here. 559.24, small one here, 535.57. I think those would be about the only gaps that would fill. I don't think we're going to start, heading down into the high 400 range at all by any means. I think we're going to come back down, make it, if we make it past the 200s, not by much, and then we're going to collectively rally right back up for 2025, and this will be the only correction that hopefully we see in 2025 moving in. That is, again, just based off opinion and how we see trend on moving averages, okay? Other scenario for SPY is going to be something that opens up in line or close to, so it does one of those shies again where it opens up above yesterday's lows, puts in a candle right here, and all it does is do like a walk down 3 red candles where we get, again, very close to the 100 EMA, and it chops, right? Which, again, it can hit the 100. And again, this is a shy. So if it reacts to anything like QQQ did, we might just end the week right near the 100 EMA, because what QQQ did with the 50 SMA in the red, it shied it, came up, ran, came down, shied it, tagged it, right? Tagged it, still didn't follow through with some kind of crazy short. It actually held it today, right? And that was the interaction. Now, again, SPY could treat that 100 EMA just like QQQ treated the 50. It's just a moving average. So when we want to see something continue, that's going to be it. Now, as long as this doesn't loop the 50 SMA and head back up, fine. If it wants to do that, I don't care. We're reactive over under moving averages. So if it comes down to the 50 on Qs, holds the 50, starts running up, hits the 10 SMA, and then wants to do another leg down, no big deal. The only reason that would happen is because SPY does hold a gap above right here. So this is an unfilled gap. So regardless, I think the SPY will end up back up here at 598 again. We're just going to say when. When doesn't really matter. Just how the reversal works is what's going to be most, grueling to me to figure out. So this gap right here, and the 100 EMA over under is our biggest sequence play out. But again, I think these gaps right here will fill, if not tomorrow, very close to the next couple weeks. This huge gap set will not stay left open. I think we're going to come down into the mid 570s for sure. And with any luck, let's say we get a little panic correction, right? Santa rally's over, January Q1 comes in. As markets come down to support of the 200s, maybe in the next, it could be 2-3 months, generally speaking. Crypto goes hand in hand and then offsets at the new year, right? So January, February, March, generally good for crypto and can be pullback, Republican-based pullback presidency early for sentiment in January. We're going to cover some of that stuff on YouTube this Saturday. So if you're interested in sentiment trading or want to figure out a little bit about AI investment sentiment, seasonality, we're going to cover some of that for a free live stream on Saturday. So it'll be about noon. I'm probably going to aim for noon this Saturday, and that's going to be right on this channel for BRT. So if you guys are interested in some of that stuff, we're going to start doing that every week. And that's it. So if any of this sounds great to you guys and you want to be a part of the predictions and teaching how these algorithms chase each other, how the moving average magnets work and the algo magnets work, link is in the description to sign up with us. If not, hey, we'll see you on the next video. No big deal. You guys take care.